Thanks everybody for being here. I'm Carol White, the CEO of the New Mexico Restaurant Association, and most of you know me and have been on these calls. And before I introduce our special guest, I just want to talk about some things that are going on in New Mexico. As hopefully you all know, the governor did say yesterday that face coverings are required for all restaurant employees now. And inside of these same requirements is a requirement that you test your employees before they come into your restaurant. Now, it doesn't say specifically that you have to take their temperature, but I would suggest that because I think that is coming out in the next version. But what it does say is that you need to quiz them. Have you certain things? We'll send out something on that tomorrow. So be looking in your inbox tomorrow for what questions you should ask your employees. And this comes not from the New Mexico Health Department because they don't have anything yet. It comes from, I think, South Dakota and Washington both have something that is on the National Department of Health site. And so we're using that for now until we get something New Mexican. And before we go into this, I want to tell you all that we have a call on Friday with Mayor Tim Keller in Albuquerque. And so, you know, I mean, you're all welcome to be on the call, but it's specifically for restaurants in Albuquerque. We also have some other calls scheduled for next week. Monday, we have the National Restaurant Association, Aaron Frazier, who is the one who's been spending most of his time dealing with the PPP bill. He will be on to answer our questions. He also is extremely familiar with the new relief plans that they're asking for restaurants specifically. And so he'll be talking to us about that. On Tuesday, in anticipation that we might be able to open on Friday, and just so you know, we have heard nothing definitive. I've got a call into the governor just to find out what she will say. If they're going to tell us that this is going to happen or not. So far from what I know, we haven't hit the 4 measures that she expects us to hit in order to reopen. And so I don't know if it's going to happen on next Friday, the 15th, but I should have something by Tuesday. And on Tuesday, Allison Smith and Allison is our lobbyist, will be reviewing documents from the New Mexico Environment Department, the New Mexico Workforce Solutions, and the Department of Health to help you prepare for the reopening. And then on Wednesday, our guest is going to be Mark Dow. He's with Bauman and Dow, and he will be discussing business interruption insurance. Do you have coverage? If so, each policy is a little bit different, and you must file a claim. So what do you do if you get a denial letter, and how do you get that letter, and what do you do with it? So those are the things we'll be talking about on Wednesday. We may fill this up with something on Thursday and Friday as well, just depending on what the governor comes out with and what you all need from us. So today, Barbara Kline approached me a while back and said, you know, Carol, I really want to help your members. I think they are, you know, the power that runs New Mexico, and I just want to do what I can. She's a member with Absolute Realty Investments, and she is here to talk to us about whether you plan to emerge robust or you're considering shutting your doors. What are some of the things you need to do? So Barbara, welcome. Thank you for being here. Thank you for being here for our members, and you're welcome to share your screen.
Thank you. I love the technical parts of getting these things set up. I also love how slow my computer is. Okay. Well, I think one thing that everybody seems to agree on is that nobody knows how this is all going to turn out, how long it's going to be, what it's going to take to get back to normal. And, you know, as Carol mentioned, I wanted to reach out because I have some experience that may be relevant to some of you. I'm a business broker and a commercial realtor. And although my main job is to help my clients sell their businesses for maximum benefit, I think a lot of what I've learned in doing that has relevance to this situation. So it very well may be that a lot of what I'm presenting today is really going to be things that you have thought about. And hopefully by presenting my viewpoint, I can add a couple of tips that are going to help you with the tough decisions that I know a lot of you are going to need to make. I've been both a business owner and a business consultant, so I've had an opportunity to observe how businesses are run. And, you know, in my experience, I think there are many strategies for running a business as there are businesses, but equally, I think there are a few critical decision points that most business owners face that we can kind of focus in on. So one of the things that I found really interesting was that when the shutdown started, there was a lot of what really sounded like panic going on. You know, we heard of businesses, and a lot of them were very large business. Yeah, Jerry's smiling. There were even a lot of very large businesses that just kind of announced right away that they weren't going to pay rent. It was like 2 weeks into the shutdown. Essentially, they either decided that this was going to be a really long-run situation and they wanted to make sure that they were preserving cash, or they really weren't paying attention to their cash flow and really didn't have the money to pay that rent. You know, other businesses abandoned their spaces in the middle of the night. You know, I saw a couple of these. They just disappeared. Other business owners simply announced they weren't coming back. But what's interesting is that after that initial flurry, things seem to have settled down. And most business owners are really buckling down and keeping on, keeping on. And so the title of this, Hoping for the Best and Planning for the Worst, is really what I think is going to be critical as we move into the next stage of this process. So when we talk about uncertainty, I think we are really talking about uncertainty. Nothing like this has ever happened before. And the headlines from papers here in New Mexico, the Journal and the Albuquerque Business First, you know, really reflect this. Jobless claims are surging. Restaurants are grappling with lost businesses or with lost business. Many restaurants probably aren't going to be able to use the small business aid the way they thought they were going to do. You know, there are new restrictions that have caused New Mexico restaurants to get creative, and I must admit some of them are fantastic. It's really been interesting. And even though, you know, there are a lot of challenges out there, we've also found a lot of industries that are flourishing. So it's an interesting, strange time. It's a time that's calling on all of us to be at our best, our most creative, and our most positive. So I want to get back to, I think, something that is really interesting or important to discuss as we talk about hoping for the best and planning for the worst is, you know, the basic approach towards business. And one of the things that I found is early on, you know, I've kind of set a pace for myself now, but early on, it was kind of, I'd come and sit in front of the desk and say, well, okay, what am I going to do? And what I discovered was that I had some time I didn't normally have, and I had some time to start doing some of those structural things that it's always so easy to say, well, I think I'll wait. You know, I really have all these other things that I need to do. And that kind of brought me back to Michael Gerber, which is a gentleman that I first ran into in the 1980s. I don't know how many folks have read the E-Myth or any of the other books that he put out, but he did a beautiful job of kind of describing the transitional stages of a business. And he was observing that most people start a business because they've got an idea, they've got a product, they've got a service, they've got a passion, they want to deliver it. And this is a great way to start. There's a lot of time and effort put into that. But there comes a decision point where a business is either going to really turn into a lifestyle business, which is defined as, you know, paying yourself to do a job. There's no real business growth strategy involved there. Or you have to start building the structure that is going to enable that business to grow beyond just what you do and what you know, and start expanding into other areas. And it's an important thing to look at, and I think this gives us the time to look at it, is to make sure that we aren't letting day-to-day urgencies get in the way of really doing the practical work that needs to be done to determine a strategy for moving through this period. I know when I first started working, somebody hung a sign in my office and it said, when you're too busy fighting alligators, you don't have time to drain the swamp. And it's very true. I laughed. I thought it was funny. The more I worked, the more I realized how serious it could be. But the point is that if you don't just devote a little time every day to draining the swamp, you're always going to have alligators. If you get the swamp drained, even if it takes a long time, most of the alligators are going to be gone. And that's basically, I think, the message of Michael's book and the thought process there. So that led me to kind of my 3 golden rules for creating a successful and ultimately saleable business, and in this case, a restaurant business. And I started putting these together because I was working with people who wanted to sell a business in the next, say, 2, 3, 5 years. And there are some important things that you have to do as you get ready to sell a business, so that it's not just something that you wake up one morning and say, okay, it's time. And those things have to do with making sure that you've got something that's sustainable so that somebody is going to want to buy it. And that includes making sure that you've balanced your short-term income goals with long-term investment goals. And this comes about in a number of different ways. I think one of the ones that happens a lot with small businesses is they get the advice that they should drive their profits down to 0 every year so they don't have to pay any income taxes. And there's a certain benefit to that, but have you gone out and tried to apply for a loan when your tax return says that you only made $100 in the last year? You will find out that it's going to be very hard, not to mention very expensive, to get that loan. Another example of this, which is, you know, on a very different scale, is publicly held companies. It used to be that publicly held companies would thrive for 80, 100 years or more. And over the past 20 or 30 years, the life cycle of a company has been dropping dramatically. And that coincides with the time when it became high pressure for a publicly held company to perform on a quarterly basis. If you're performing on a quarterly basis at a high rate of return, it's going to be really hard to have the money invested in those things that are going to allow you to have longevity. So everybody's going to have a different reason for looking at this, but it's a critical component. Another is marketing for growth. You want to make sure that you continue to be outward facing, you continue to be working with people out there. You have something that when you leave, when the owner leaves, the business isn't going to disappear. You know, for example, I had a boss one time who named the agency after himself. And after about 10 years, he changed the name of the agency because he realized that as long as his name was on it, nobody else was going to have any credibility. Everybody wanted to speak to Regis. And so this outfacing marketing so that people recognize the company as opposed to the individual is really critical. And then the last thing is making yourself dispensable. And you do that for 2 reasons. One is so you have the time to do this other planning. And the other is basically because if somebody is going to look to buy a business, they don't want it to be all you. If you're the one that does the sales and you're the one that does the cooking and you're the one that does the serving, nobody's going to want to buy the restaurant because they'll never be able to replace you. The nice thing about this strategy is that it, of course, applies to people who intend to stay in their business for the next 40 years. All of these things that make a business successful for selling are the things that are going to make it successful and help it grow at the time that you're still working in it. So it's kind of a double benefit. And the next thing that brings you to is finances. And this was a hard lesson for me to learn. I always thought financials were something that I could pass off to whoever was doing the accounting and look at them once a month or so and see how things were going. But, what I have discovered over time, both in my own businesses and in the business that I work with, is that it's the core of every business, from handcrafted jewelry to discovering the vaccine for coronavirus to anything in between. They tell you, the numbers tell you what you're doing right and what you're doing wrong and where you have opportunities for improvement. And I'll tell you, I've come to believe that if reading your financial statement doesn't get your blood flowing a little bit hotter, then somebody should teach you why it should. And I think the virus has kind of created some opportunities to look at that. The government programs that came out, and I give them some strong points, because instead of just tossing money out and saying, okay, here it is, it was designed to try to keep cash flowing, try to keep people employed, try to allow businesses to remain as normal as possible, even though there were some very difficult things happening. But some of the minimal criteria were difficult for some businesses to reach, basically, I think, because they looked at financials the way I used to look at financials. There were a lot of folks that had to scramble to file a 2018 tax return so that they could apply for some of these programs. They might be a few months behind, or they might not have other information that is necessary in order to put together the package that's going to get you the loan. One of the blessings and banes of our existence has been QuickBooks, because there are so many people now who use a family member to enter the information in QuickBooks because it really looks easy. But unfortunately, if you don't know accounting, QuickBooks is not going to force you to tell the whole story. And for those of you who are aware of what a balance sheet is all about, most balance sheets, when somebody has done their own QuickBooks, will quickly demonstrate that they've got a lot to learn. So businesses can only evolve against the backdrop of truly understanding what the financial underpinnings are. And I can't emphasize enough, financials are so critical, even though they seem to be so painful and difficult to keep track of for a lot of folks. There's always something else out there. Two areas right now that are critical are cash flow and documenting your crisis expenses. Those of you who are struggling right now are aware that cash flow is a challenge, because you've got to know how to keep things rolling. Well, think of what's going to happen when you open. If you don't have a good handle on your cash flow projections, as opposed to looking back and seeing what cash flow has done, how are you going to know what to order, when to order it, and how to pay for it? The importance of cash flow projections is that it gives you a little bit more strength to see when you're going to need money and determine how you're going to get it. And this, by the way, works for those companies who are also, wildly successful right now. If you're growing right now, you're having to invest in people or product or whatever, and you probably aren't going to get the receivables in time to sustain that growth. a lot of companies have just as much trouble growing as they have shrinking. And again, having a good cash flow projection is going to be critical. The other thing is documenting your expenses. There was a lot of conversation about this at the early stages of this shutdown. I haven't heard so much recently, but the difference between whether the government programs are a loan or a grant, a lot of that is going to have to do with your ability to document how you spent the money and why you spent it that way. There are other areas where you're going to need that same information, which is why you want to carefully capture it now as opposed to trying to reconstruct it down the line. And that is, again, applying for loans or any kind of financial assistance or support. You're going to have to demonstrate why this was a blip as opposed to something that would have happened anyhow. And one of the big conversations that I'm having with colleagues in the brokerage field and the assessments, the professional assessors, is how people are going to treat this drop, whether it's going to be considered exactly the same way as, if you had suddenly just quit operating or had a major operational crisis, or whether it's going to be considered as a blip. And one of the ways that you can prepare yourself for how that is going to evolve is by having that documentation now. Because particularly with large businesses, an investor who is going to purchase a business is going to want to look back 5 years. So we're talking 2025, 2026 before this is all going to wash through. Now, accounting is going to help with a lot, or understanding your financials is going to help with a lot. But, still some restaurants are not going to make it. And if they are not going to make it, then the issue is how to have the softest possible landing. And this is where the plan for the worst comes in. In most cases, having to close is not going to be a decision that's going to come to you at 10 o'clock at night and you're going to implement it the next morning. It's going to be something that is slowly moving forward. And so what you want to do is take control of this so that you actually have the understanding about what's going on, what changes you can make, what might not make, so that you can have a go, no-go point before you're totally underwater. Kenny Rogers is one of my favorite singers, and The Gambler is one of my favorite songs. I think I memorized the lyrics the first time I heard it because they were so much fun. There's a kind of an American theme, which you don't run into quite as much in other places, that if you fail at something, it's kind of like a long-term black mark on your resume, on your personality, on how people look at you. But this song talks about it in a different way. Gamblers are some of the biggest risk takers out there. And yet, in order to be a successful gambler, you have to know when to walk away, which is when to quit. And legendary business owners have equally had this story. It's very rarely that you find somebody that walked in, created a business, became a wild success, and lived happily ever after. And one of the interesting things, as far as this is concerned for me, and one of the things that helped me desensitize on this, if you quit, you're a quitter, it was watching what was evolving in Silicon Valley. Because initially venture capitalists, when they were investing in a startup, if you had failed, don't bother to talk to them. One failure and you were out because you had lost somebody money. But time and experience taught them that the entrepreneurs that had failed and learned from it were really valuable for the companies that they were investing in. And so all of a sudden, the idea of failure, as it were, or quitting, got redefined as what's called the first attempt in learning, FAIL. And I think it's important that we look at this right now, because there are a lot of people that are suffering and going to suffer more for conditions that have absolutely nothing to do with how they run their business in the past. So what I'm talking about, and Seth Gardenswartz brought this up in one of the earlier presentations that we had, and that was that if you see that you're going to be running into a problem, if you think your business may be failing, you want to have the guidelines in place so that you can begin the exit process early. If you delay closing something that looks like it's going to have to close, all it's going to do is result in higher costs and more heartache. See, you don't allow the ship to sink to the point where salvage is impossible. And that brings us to a plan. Oops, sorry. If you have a plan in place, if you take the time now, and particularly since opening is coming back up, to assess your current situation and see what you can do going forward, and then take actions based on that plan, you have the best possible success, the best possible chance of, first of all, success, but second of all, soft landing if such a thing has to happen. In the assessment stage, that's where you want to take advantage of advisors. And I emphasize this because, part of the entrepreneurial experience can be that you're a Renaissance person, you know everything. You are capable, even under stress, of evaluating every aspect of the business and coming up with the ideal way forward. But history and experience teaches you that QuickBooks is not going to make you a CPA. Law Depot or Rocket Lawyer are not going to turn you into a titan of business law. There are a reason why there are successful professionals out there, and this is one of the times when you absolutely want to take advantage of them. It's a false economy not to call in these folks and have them help you work through it. And this is going to be things like, having your CPA show you where the biggest holes in your operation are, where you are most out of line with successful practices, and where you might make some changes. This is where you talk to attorneys about your contractual obligations, and this is not only company debt, it's also the money owed you. Have them work with you to figure out how you can amass the biggest war chest, as it were, to move through this process and either win successfully and keep on moving, or have the softest possible landing if you have to stop. Also, you want to bring in key members of your staff. These are the folks that are out there on the front lines making you money, and they often have insights based on their experience that somebody more senior is not going to see, or at least not see as quickly as they do. And I've found from a number of experiences that they love to be involved in this part and provide suggestions and ideas that might help. So at the end of this process, and it doesn't have to take a long time, by the way. This is something that can be done pretty quickly if you focus on it. At the end of the process, you should know strengths and weaknesses and where your liabilities are, and what changes would have the greatest possibility for success. The next part is the plan. And the plan needs to be measurable and have milestones. Again, drawing on my Silicon Valley experience, which was an interesting time and place to be, we really were called upon to measure what matters. And it makes sense, because if you can't measure it, it really isn't going to matter, because you don't have any control over it. So you want to make sure that you've set up those things where you have control, where you see you can make a difference, and measure that to see what your progress is. And this is also the point where, when you're deciding what measurements you're going to take, you decide at what trigger points you're going to make decisions about how you're going to change your processes in the future, or whether it's time to look for a different option. Next part, of course, is working to the plan, and that's critical as well, because how many of us have plans that were made at one time or another that didn't get opened as soon as the product was bound and put in your file cabinet. This is a time, if you're investing in this kind of energy, you want to be honest about what you're doing and how you're going to move forward. And one of the great things about this is that this process often leads to success. It's not a last-ditch process. It often really will generate a structure that you hadn't really thought about before that is going to lead to real future benefits. But also, don't delude yourself if the plan isn't working. This is the time to really stay the course and continue to measure and see what's happening. So let's say the worst happens and you decide you have to close. Having the plan in place and having your agreed upon trigger points gives you a lot more flexibility in closing. And this is critical, and often, again, because of the reluctance to give up and to say, okay, this just isn't working, people don't spend enough time looking at what the options are. This distress sale is something that's very important. I mean, there's always going to be people who are looking for businesses that aren't healthy and wanting to come in at a bargain price. And in any other time than a crisis, you make your decisions based on what you want to make your decisions on. But in time of crisis, if you're going to be forced to close because of reasons that really have nothing to do with your ability to run a company, you might want to consider this as a way of getting some additional income to assist in closing down and also moving forward into what you want to do next. Looking at restaurants, for example, there's a large investment that you've made in a restaurant, whether you own the property or whether you're leasing. And, that's going to include things like the build out, how the kitchen was designed, what the eating areas looked like, what the tables look like, what the dining ware looks like, the glasses, whether or not you have a bar, if you've got private meeting rooms set out, the technology that you put together to manage the process from the time that somebody comes in the door until they pay. All of these things are going to have value to someone who is looking to move into the restaurant business at this point. There's also things like recipes, the reputation of the place, and also for those of you who have held on to staff or whose staff is able to hold out until it's time to come back, a well-trained kitchen and wait staff can make a huge difference in terms of the value of a business. So it's worth a frank discussion with your advisors, which would include a business broker at this point, to see if there is an advantage to looking into a distressed sale. If time or preference doesn't support that, liquidation is another process which gets more expensive the further down the track you get. There are pieces in a restaurant, particularly if you've leased, that are, fixtures which are going to stay when you go no matter what, but there's also a lot of equipment that you have there that you could move out through an auctioneer or a liquidator and bring in some income again to assist you in the process of moving through the closure and what's going next. Bankruptcy is another option, and this has nothing whatsoever to do with where my expertise is, so I'm only going to say that it is an option that can be considered, but I would really make sure that I talk to legal and financial counsel before I did that, because there are some pluses to it. There's also some negatives, and you want to make sure you know what you're getting into if that is the path that you feel that you need to take. So to get back to that first attempt in learning, nobody has been through this before. And doing it has been amazing. And one of the things that's been amazing is the resourcefulness and the positivity that so many folks have brought to it, and the loyalty that the community has shown to a lot of our local businesses who are looking to try to weather a totally unexpected storm. But the important thing is to realize that if it is time to close, that there are options and that they can be taken advantage of. And by planning ahead, by looking ahead, by having the roadmap in place so that you know if there might be a possibility for closing, it gives you a lot more flexibility, which can make the difference between financial disaster and a fairly soft landing. So to end this, I want to say that anybody who is a business owner or a restaurateur or running any small business right now you're absolutely my heroes. You have to get up every morning and deal with unprecedented challenges that each day brings. And there's no roadmap to tell us when or how this is going to end or what's waiting on the other side of reopening. And yet you're the heart of small business that drives this country's economy. And it's my hope that, by talking to you today and by sharing some of my insights, that it may give you some extra ideas and initiatives and benefits for your business. So, at this point, I'm kind of here to answer any questions or, to talk about some of the ideas I projected. And by all means, if you've got questions or thoughts down the road, please feel free to give me a call.
So thank you, Barbara. Thank you for this. It's really hard for me to think about restaurants having to close or go bankrupt or liquidate. But
I agree with you.
So do you, distress sales and liquidation, is that something you do, or is that something, like, who does that in Mexico?
Estate sales, liquidations, things like that, there are a number of folks who do that locally. And, I get nothing out of this, but I would be more than happy to point folks in the direction of people that they should talk to. What I can help with, what any business broker who wants to can help with, is a distress sale.
And you can also help them value their business if they're hoping to sell it?
Yes, let me be clear that there's a thing called a broker's estimate of value. And it uses some industry accepted standards to draw from material that's provided by an owner and come up with an idea of what the value should be. If you need something formal, you would want to talk to a business appraiser. And that is somebody who is specifically trained and often licensed to provide the kind of valuation that you're going to need for, say, a divorce or a trial or something like that, where the legal system wants a value of your property, or your business. So yes, I can help with that, but I am not an assessor or an appraiser.
So I just invite anybody that has questions, please unmute yourself and ask your questions. So I see in this time that there's the possibility that as much as somebody else might be struggling to keep their business going, there's a lot of opportunity for people with money to come in and buy a business that may be struggling. And so I wanted to say that just because I want to give people a little bit of hope that there may be somebody out there that's looking for your business. And a valuation wouldn't be a bad thing if if it's got some value. Does that jive with what you think?
Yes. I believe that any business has value if the owner has not waited until the very last second when the sheriff is at the door and, everything is going to be out on the street in 5 minutes. And hard as it is to think about that, that's why you want to call in advisors, because that will give you a really accurate picture of what's going on as opposed to what you're telling yourself in your mind. And yes, there are people out there that are looking right now, and not all of them are in it to squeeze the very last dime out of somebody who is struggling. There are people who, because of their success or optimism, believe that this is an excellent time to get into something like the restaurant business.
Does anybody else have any questions? Love to hear from some of you.
This is Jerry. I was interested in the broker's estimate of value. That's a real estate term, or is there some specialized commercial realtor that does that sort of thing? Or
any realtor or business broker can provide a broker's estimate of value. It's specifically called that rather than a valuation or an appraisal, because those are technical terms. But what we can do is take the information that you have and show you how the industry would look at it and come back with a good feeling for what the value of what the range of value for your business would be. In the end, the value of your business is going to be what somebody pays for it.
right.
But what this will do is show you how your business compares to other businesses and what it should bring on the market.
Okay, thank you.
Barbara, this is Tom Hutchinson. Is there a, I want to say industry standard, but something that's a little bit more acceptable in the industry for a multiple of either gross sales, net sales, or something that you all kind of use as a ballpark estimate?
There are a lot of ballpark estimates. They're called, rules of thumb, to be really technical. And the multiple of gross is falling out of favor, because two people that have a business that's worth, let's say, $500,000, one of them could be running a net income of $50,000 and another could be running a net income of $2,000, just based on what the business was in the business model. So there are multiples of net income, and actually it's called free cash flow, because there are some adjustments that are made to the accounting net operating income in order to come up with free cash flow. You can get multiples for that, and I'll be happy to talk to you about that offline. I don't want to really toss any numbers out there, because they have so much to do with how well the business is doing, the percentage of gross revenues or net operating income, the percentage of gross revenue the net operating income is, the type of business that it is, including the type of restaurant it is. Fine dining has a different multiple than, say, fast food or coffee shops. So yeah, there are some rules of thumb, but that'll only get you so far. The estimate of value is something that will take into account more of the specifics of your business. And by the way, the brokers, the kind of valuation that I do, which is free if you're discussing whether or not you want to make a dual listing and actually offer your business, takes into account at least 3 or 4 different types of ways of valuing your business, so that you can actually see how it fits into a number of different categories. It's a much more useful way of looking at it.
Thank you.
Barbara, would a buyer accept a broker's estimate of value in order to buy something, or at some point would you have to get an appraiser once somebody's made some kind of an offer?
You know, it depends on the size of the business, and most of the smaller businesses, and you know, bear in mind that the SBA considers a small business to be, I think, under 300 million or something. I mean, it's some really crazy number that doesn't really apply to what we're looking at here. But most of the time, what will happen is that you know, when a business goes on the market, it will have a package that is prepared, which will have, among other things, the broker's estimate of value and the backup financials to show that. A buyer will then look at that package and ask questions and consult with their own advisors and come back, either say, yep, that's exactly right, I like it, or they will have negotiation, you know, they will want to negotiate based on how they look at the numbers and what they are, at which point we'll come to, you know, a compromise which makes everybody mostly happy. If you came to a compromise that made everybody happy, it probably would be the wrong one.
Well, I certainly appreciate it. If there are no more questions, I do appreciate you being here with us, Barbara, and being a member of the New Mexico Restaurant Association. We really, we need our associate members to help us through these times. And so thank you for volunteering to do this. And we will see you all next Monday for sure, and maybe sooner. Thanks so much for being here.
I'm looking forward to getting back into those restaurants. So see you guys soon, I hope.
Aren't we all?
Friday, Carol.
Well, Friday for Albuquerque restaurants. Yes, you're right.
Yes.
We'll be on with Tim Keller on Friday. Yeah. Bye, everyone.